Avinash Gorakshakar, Head of Research at Profitmart Securities, joins me this morning. Good morning, Avinash. We saw a massive sell-off in the first few minutes in the IT sector, but there seems to be some semblance of balancing which is now visible. TCS, which had started about almost 1.7% or so down, is now down about 1.2%. And this seems to be stemming from the bad news that we heard over the weekend, with layoffs likely making headlines again for the stock of TCS. Meanwhile, the entire IT pack seems to be under pressure this morning. Wipro is down about 2.6% or so. What's really the mood on the IT stocks this morning, Avinash?
Yeah, good morning, Kartik. My sense is that IT sector is going to be now in a very troublesome kind of and a challenging kind of phase. Clearly, 2% cut in the workforce is definitely not a good reason to celebrate. And I think this is a very clear indication that cost pressures have now significantly gone up. Growth has slowed down, and I think companies like TCS, when they talk about wage cuts, that definitely clearly indicates that how the smaller players are going to react. The larger companies like Infosys, HCL Technologies, I think my sense is that you could possibly see some commentary coming on this fact, even from the other companies in the very near term. And that is something which is now going to trouble the market, because clearly on 1st August, what comes out in the US-India trade deal is also going to be equally important, because US continues to be the mother market for almost all the Indian IT-based companies. So I think it's going to be a little cautious view now. We would definitely advise all investors to be a little cautious here, because despite the balance sheet strength, despite the cash positions, if growth quotient doesn't come, and if the cost pressures continue to go up, then I think at least for the next 2 to 3 quarters, you're going to see a little bit of pain for large players like TCS and the other comparable names I spoke. So I think you'll have to be very careful on what you choose. I think companies which are into the AI, machine learning, or maybe in the SaaS space are companies which are fairly defensive and are fairly attractive. So, companies like KPIT, Persistent, Intellect Design, these could be companies which could benefit. But the larger players are definitely now going to see a very challenging path going forward.
While, of course, the red hot blue chip companies of India's IT sector, the bellwethers, under pressure, and handled with care is a word coming in from Avinash. But Avinash, you did mention the trade deal on 1st of August or the tariffs. Well, not sure if India would be part of the tariff list, because we definitely are unlikely to have a trade deal with the US by August 1st. And that could spill into another few weeks, because the latest we are picking up is that the US negotiators will be in India in the 2nd week of August. But that notwithstanding, US and EU have gone ahead and stitched a trade deal. The Indian markets, however, still do not seem to be rejoicing too much on the certainty, or some degree of certainty, which is creeping into global trade. We didn't see any reaction whatsoever on the Japanese trade deal, or the Indonesian or the Philippines trade deal with the US. And even this morning, the India-EU trade deal is not really getting the markets to lift off on the springboard.
No, I think clearly the focus point, Kartik, continues to be the India-US trade deal. I think what has come for the EU has definitely been a good surprise, because markets were expecting a slightly higher tariff structure. And I think, companies like Tata Motors, which has got a large exposure to Europe and the US markets, I think you could be seeing that today Tata Motors is slightly up, because this is definitely going to be a reasonably good positive and a sentimental booster for a stock like Tata Motors. Markets were expecting a significantly high tariffs. So to that extent, I think some uncertainty is now out of the markets for companies like Tata Motors. But more importantly, unless the trade deal with India is signed, I think sectors like pharma, auto, IT, these are sectors which are directly positioned to the global markets. And auto components also, if you can add, there are many companies which export to the Europe, which export to the US markets. So until clarity comes in, the Indian markets are not going to go anywhere. And I think this is one factor which is actually made the market look very sluggish. So let's hope that something sooner or later is announced, and that finally clears all the uncertainty which is prevalent as of now.
Yeah, absolutely. And Tata Motors, like you mentioned, the stock is already up about 1.5% or so in trade this morning, Avinash. But interestingly, another insight that we are getting now is also from Reliance Industries. Remember, Reliance Industries had opened the day weak. In fact, the stock was down about 0.3% or so. And it's been a complete U-turn on Reliance, and the stock is up about 0.3%, despite the fact that there is a spike in global oil prices. So oil prices, the price going up, likely to impact the margins of Reliance, but we are still seeing Reliance, which has bounced back from the negative now to the positive. What's going on here?
No, I think, see, Karthik, my guess is the numbers which came, in the markets was slightly below expectations. But I think the near-term trigger for Reliance is going to be the Reliance AGM. There are a lot of expectations that on the geo business, on the retail business, there could be some sort of big announcements by the management. And I think retail is one area where a lot of talk in the market has been going on that some indications of a value unlocking could happen in the near term. So I think the oil business is going to be a steady business. We don't expect any major positive surprise, at least for the next 1 to 2 quarters. And I think clearly oil prices go up and down. The refining margins, I don't think for Reliance are going to be impacted either positively or negatively in a big way. So let's wait and watch for the Reliance AGM. I think, we could see some sort of big news flow coming in at that point of time, which the markets are looking forward to.
All right. And talk to us about other aspects that come out of this trade deal between US and Europe, especially with respect to the dollar index, which is now down, about 97 odd levels. Remember, this was once nearing the 110 levels, but the dollar index is now down. So the dollar is weakening. The euro is becoming a little more lucrative. We are also seeing, like we mentioned, oil prices are going up, but at the same time, gold is coming down. And overall, the sentiment in the markets, Avinash, now instead of being a buy on dip market, it seems to be a sell on rise market. So overall, what should be the trading strategy? Which are the asset classes and which are the bets that retail investors should take in a volatile time like this?
No, I think, see, clearly a sustained recovery in the equity markets here would depend on how earnings numbers pan out in the second quarter. I think earnings numbers, as you are aware, Karthik, have been below expectations. And I think that has been a very big dampener because markets were expecting earnings to get a big boost up. I think if you look at most of the banks, both the private sector and the PSU banks, as well as the NBFCs, a big concern now for the market is that, players like Bajaj Finance have sounded quality of stress going up, specifically for segments like, doctors, which they finance. Shriyam Finance has also indicated some sort of stress in the sector. HDFC Bank also, when they came out with numbers, they said there is a lot of stress in the commercial vehicle sector. So I think credit growth has fallen very sharply. And I think unless credit growth goes up, the markets are not going to go up in a hurry. The banking system, anyway, if you look at the overall exposure of the banking in the Nifty, then I think they have around 40% exposure. So the Nifty is now going to play very slowly. My sense is that, sectors like hospitals, hospitality, capital goods, construction, these could be sectors where some sort of growth could come in. Even in the auto sector, two-wheelers and maybe the utility vehicle sector where Mahindra and Mahindra is dominant, I think could be reasonably good defensive bets. But I think completely, away from IT as of now. And metals is a surprise pack. If you see the numbers of metal companies, raw material prices have come down. So I think net it's a mixed bag of numbers, but markets expect a better earnings number for quarter two. And unless that happens, markets are going to struggle. So I think, you'll have to go through this pain for at least one or more quarter. And then only I think you could see a good rise. But eventually, I think equity will play out possibly in a better way in the second half. Gold prices have gone up. So frankly, at these levels, I don't think it is an investment grade kind of asset class. And interest rates, the way they are going, I think we could expect another rate cut, hopefully, maybe not immediately, but going forward. So that makes equity definitely a much more asset class to invest in the next 12 to 15 months.
Right, stay invested in equities is the word coming in from Avinash Gorakshakar. But one more quarter of pain and hopefully better Q2 results should lead to some sort of a rally in the markets. Avinash Gorakshakar, thank you so much with these inputs and for joining us here this morning.